Hello guys, in this video I'm back testing an ICT based forex strategy using real market data from Monday the 19th to Friday the 23rd of January 2026. That is the week that just ended. I'm not going to do any cherry picking. We'll go through the trades exactly as they played out and see if these ICT concepts actually hold up in real time. Let's get straight into the charts. This is the 4-hourly chart for the beginning of the day at 00 GMT on 19th January 2026. At this point, we can identify this area of sell side liquidity that has been taken. There is also buy side liquidity over here that was yet to be taken going into the day. There are multiple areas of buy side liquidity actually. Let's identify all of them, as many as we can identify. This is at the time of the 8 o'clock 4-hourly candle formation. We can notice that price wicked through this area of buy side liquidity. It didn't hit any premium array. That means that according to the model we use, we are going to go down to the 15-minute chart and identify a discount array around that area for entry going into higher prices. Right here at the 15-minute chart, you'd notice that at the close of the 4-hourly candle, that is at the end of landing open kill zone according to ICT principles, price had traded to this bullish order block on the 15-minute chart. Right there, we can set a limit order around this area and set our stop loss below the low of this bullish order block, which is this bearish candle. Or we could go downwards to the 5-minute chart and you'd notice that there is another bullish order block here that we can use for entry. The opening price comes in at 1.34042. It closes at 1.34040 with a low of 1.34021 and a high of 1.34049. We are going to place a limit order at 1.34040, set our stop loss below the low of that bullish order block. You set it at 1.34010, which is about 3 pips away. Then we would go up to the 4-hourly chart and set our take profits limit right before we get to the rejection block around 30.1 pips and go down to see how price panned out. We've been triggered. Climbing higher, and boom, a target has been reached, and that was 30 pips on Monday. This is at the time of the 8 o'clock that
price
are taking this area of buy side liquidity and another area of buy side liquidity, and had gotten as far as the rejection block over here. At this instance, from price taking this area of buy side liquidity and reaching a rejection block, we expect for lower prices, and so we would go down to the 15-minute chart and identify a shift in structure. Before we move to the 15-minute chart, when you come down to the 1-minute chart, there has been a shift in market structure. When price traded into the rejection block at this level, it's dropped down, traded a bit up, came down, and went through it, came below that level, which is also below this swing low, the last swing low that took out the swing high, and that was where market structure shifted. At this point on the 1 minute, we can confirm market structure shift. Following our model and going back to the 15-minute chart, we would then have to look out for a premium array, and over here by the close of the landing open kill zone, that is the close of the 4-hourly candle we identified, there is a rejection block created over here, which we can use for our entry. This bullish candle closes at 1.34811, so we will set a limit order at 1.34810, or 800, and set our stop loss limit above the high of that swing point over there, which comes in at approximately 7.1 pips away. And remember, we had taken an area of buy side liquidity, therefore our target will be into internal range, and we can set our limits up to this point, which should be about 30 pips away. With this in place, let's do the replay and see how price fared. We've triggered, and boom, a target has been hit. And that was what played out on Tuesday. On Wednesday, let me clear our chart a bit for clarity. We've traded through these areas already. On Wednesday, by the close of this 4-hourly 8 o'clock candle, you'd notice that price had traded through this area of sell side liquidity. And through this area as well. Right here. When we move on and look towards our left, we will see a classic ICT breaker block, sell side liquidity purged, price trading through the high and coming down back to that level. That is a breaker block, a bullish breaker block. I'm going to extend this breaker block out in price right here. That is a bullish breaker block on the 4-hourly. Now at this level, since price had not traded to that level yet, what we could do would be to scale down to the 15-minute chart according to our model, and look for a discount array around this area for entry. I'll do just that. You notice that this is where the 4-hourly breaker block originates. This area right here. However, on the 4-hourly, you would notice that this bullish candlestick here has a very long wick. Therefore, the tendency for the market to trade deep into these consecutive candlesticks is very low. Hence, we can set a limit order around the opening price of this first candlestick in the series of bullish candlesticks here for entry. What I'll do then is to go back down to the 15-minute chart and set a limit order at this area. The opening price comes in at 1.34031. It closes at 1.34044 and then makes a low of 1.33982 and a high of 1.34051. We will set the limit order at an approximate value to the closing price, since this is a bullish candle. So at 1.34050 is fine, and we will set our stop loss below the low of that bullish candle, which is at 1.33980. Let's do that. .050, and then our stop loss would be at 980, which is about 7 pips away. We'd go up to the 4-hourly chart and set our take profit limit 30 pips away. Yeah, I'll go down to the 15-minute chart. We'll do the replay and see what price did. We've triggered, and boom, our profit has been taken. That was the outlook on Wednesday. On Thursday, by the close of this 4-hourly 8 o'clock candle, you'd notice that price are traded to this area of a bearish rejection block on the 4-hourly. Which is indicative of us looking for lower prices. We would go down to the 15-minute chart. And you would notice that there is an area of internal range liquidity right here. That is a fair value gap here. We will set a limit order at the high of the gap, since we are looking for lower prices, which is 1.34492. We would round it lower to 1.34490 for a limit order. Okay, I'll leave it at 1.34491. Our stop loss limit will be above the high, which is about 10.5 pips away. And since we are moving from internal range, we would move to external range, that is right below this level here, which is giving us 40.5 pips. We will play this and see what price did. Okay, we've triggered now, and boom, our profit has been taken. So that was the outlook on Thursday. On Friday, let me clear up the charts. You'd notice that we've moved so far away from where we took our profit on Thursday. So by the close of the 4-hourly 8 o'clock candle here, you'd notice multiple things. This area of buy side liquidity had been taken. This area of buy side liquidity had been taken as well. And there was this area of buy side liquidity waiting to be taken. At this level here, when we look further to our left, you'd notice that there is no premium array that prices are traded to yet. So our expectation then would be that there's going to be a retracement to a discount array for higher prices. Coming down, the next discount array we see is this area of the buy side liquidity. We'd go down to the 15 minutes chart to further reduce our risk should price come down. When we come down to the 15 minutes charts, and as we've seen with long wicks, that means that this is right here the area we would use for our entry, and we would set our stop loss limits below the low of that candlestick. It opens at 1.35075, closes at 1.35132, makes a low of 1.35044 and a high of 1.35164. We will set our stop loss limits below the low, which is about 12 pips away. We would move up to the 4-hourly chart and take our profit. We will set our take profits level, and as we do, 30 pips is enough for us. I'll scale down to the 15 minutes chart since that's what we use to frame the setup, and see what happens for us. We are triggered. And our take profits level has been hit. Let's take a look at the replay of the trade report. There were 5 positions in total. 5 positions were closed. We made 5 orders in total. And here are the orders. On Monday, 30 pips, 30.1 pips profit. Tuesday, 30.1 pips profit. Wednesday, 30.6 pips profit. On Thursday, 40.5 pips profit. And on Friday, 30.6 pips profit. I hope you found this video insightful. Until next time, cheers.